Hey everyone, this is Greg Miller from Spinoff Investing Simplified. I'm your host here at Spinoff Investing Simplified's YouTube channel. And I appreciate you stopping by and taking a look around. If you appreciate this video or any of the others, please subscribe to our channel. We would love to have you along. We also appreciate your comments, and smashing that like button helps us out with the YouTube algorithm. We sure appreciate your time with us and hope you enjoy this video. Thanks a bunch. Hey everyone, this is Greg Miller from Spinoff Investing Simplified, up with another weekly video about investing. And today we're going to talk a little bit about coming from positions of strength when you make your investments. This has been being recorded during the coronavirus, and a lot of people have seen the coronavirus drop in share price, and then some of the things that have happened over the past month or so. I'm recording this on May 18th, 2020. So one of the things that I learned going through the coronavirus is that my investing is better when I'm in a personal position of strength. So my recommendations to anyone is that prior to your investing, you should be in the same position that I am. And that is, you need to have no consumer debt, and you need to use only money that you can afford to lose. And then finally, only use money that you are willing to lose. And I take this perspective with, in particular, spin-off investing, because I have to be willing to lose the money. I'm not perfect at this. This is a new experience for me relative to my prior investing experience. I've been investing since I was in high school, but over the past 20 years, it's only the past 3 or 4 that I've spent my time looking at spin-offs as a specific investment method. And so I don't like to put all of my eggs in that basket, you might say. I like to spend my time looking specifically at the companies and being willing to lose the money that I have with them, and then use the money that I can afford to lose on them, still having money for retirement and all that taken care of. I also like to have a position of strength on the investments myself, and this will be a little bit different than what most people are thinking of when they think of positions of strength with their companies. The best thing that you can have when you're looking for a position of strength with your companies is to first know what you own. If you own cyclicals, recognize that they're probably going to have downward pressure during a cyclical event like the coronavirus, or in my case, with KLXE and the oil crisis that has been happening with Saudi Arabia recently. And knowing what I own and knowing what's going on with that, I think is extremely important. I also have some money set aside for American Outdoor Brands, and that is a gun manufacturer. I know what I own. I know that that particular investment is probably not going to be worth or meet its requirements until we have a Democrat in the presidency again in the United States. So I'm looking at that as a 5-year time horizon, possibly, for realizing the returns on that particular company. So knowing what you own really is the position of strength. It's not a position of strength of the company per se, even though that is definitely important, but I'm looking more at the investor yourself. You need to understand what the investment is so that you can be comfortable when the price bottoms out on those companies. Number 2, you need to understand and know what you expect the company to be worth. So knowing that, I mean, that's value investing 101, folks. If we're not doing that, then we need to understand it. And one of the things that I like to do when things go down is I like to understand the operating metrics of the company, and just making sure that those operating metrics haven't changed too much, because inevitably they will, but understanding how the cyclical nature of those operating margins may change that. That's actually part of the reason why I have thrown more money into KLXE over the last couple of months. It's because I'm trying to, I recognize what the company was probably going to be worth, in a few years. Right now, it looks terrible and terrifying for a lot of people, but I think that it'll turn out quite well post oil crisis. Then you should also assign a confidence level or a confidence metric to your value analysis. So my confidence level for KLXC is pretty strong. My confidence level for Garrett Motion is a little bit less so due to all of the different unknowns and unknowables about the company. But really understanding what you own and understand your confidence level in what you own, that will help you make the decision. And sometimes the ironic thing, we talked a little bit about biases last week. Sometimes the ironic thing is that your confidence level may be low on a company that will eventually turn out to be quite a good purchase, because the confidence level for everybody else in the market on that particular company is also pretty low. And then finally, you need to consider the biases your analysis assumes. So biases that I'm thinking of are the biases like, hey, is the economy going to be just fine over the next 5 years? The bias for KLXE, I'm pretty sure Western Intermediate, or West Texas Intermediate will be a little bit higher than what it is currently right now in 5 years. I also have the bias that I expect KLXE to survive the current market dearth. And then I also have the bias that we will eventually get out of this particular weakness and see some strength in about 3 to 5 years. So those are the biases that I'm considering, and I'm sure that there are others. And then understanding that those biases are there, and then also understanding that I probably could be wrong, is one of those things that will help everyone have that investment position of strength. So anyway, some of the things that I recommend that you should consider as you're doing your investments and you're looking at spinoffs is understanding the position of strength that you are in and how strong that position is, and making some sort of assessment on how confident you are in your assessment will help you make the best decisions. So anyway, thanks for watching, guys, and good luck out there. Let me know if you have any comments or concerns. I'd sure like to hear from you. As we finish up, we have one final note for you. This video was made for educational purposes only. Any companies mentioned in this presentation were discussed for educational purposes only. Discussing such companies and the specifics about them is for illustrative purposes only and not a solicitation to purchase them. We recommend that you conduct your own research and identify why you might want to own the company yourself before you commit any funds. We also recommend that you seek the services of a financial advisor that has considered your situation as your fiduciary. May your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks.